Building strong business finance skills starts with mastering the fundamentals, and the good news is you don't need an MBA or an accounting background to get started. Business finance is simply the process of managing your company's money so it can operate efficiently today while continuing to grow for years to come. One of the first concepts every entrepreneur should understand is the difference between revenue and profit. Revenue is the total amount of money your business brings in through sales. Profit is what remains after you've paid all of your expenses. Many new business owners celebrate growing sales, but revenue alone doesn't guarantee success if costs are eating away at the bottom line. You'll also want to become familiar with 4 essential financial terms: income, expenses, assets, and liabilities. These appear on nearly every financial statement you'll ever read. Income is the money your business earns. Expenses are the costs of operating your business. Assets are everything your company owns that has value, while liabilities represent everything your business owes. Another concept every beginner needs to understand is cash flow. You've probably heard the saying, cash is king, and there's a reason it's repeated so often. Plenty of businesses have been profitable on paper but still failed because they ran out of cash. If money isn't available when bills, payroll, or suppliers need to be paid, even a healthy business can run into trouble. You'll also hear the term working capital. This is the money available to keep your day-to-day operations running smoothly. Without enough working capital, growth can quickly become difficult to manage. It's equally important to understand what business capital actually means. Capital may come from loans, investments made by owners or shareholders, or profits the company chooses to reinvest instead of distributing. You should also know the difference between debt and equity. Debt provides funding that must be repaid with interest, while equity gives investors partial ownership of your company in exchange for capital. As your business grows, you'll want to establish clear financial goals. Some are short-term, like covering monthly operating expenses and maintaining healthy cash flow. Others are medium-term, such as increasing sales or improving profitability. Long-term goals might include expanding into new markets, opening additional locations, or serving customers internationally. One of the most important habits every entrepreneur should develop is keeping business finances completely separate from personal finances. Separate checking accounts, credit cards, and bookkeeping records make your financial reporting cleaner, simplify tax preparation, and give you a much more accurate picture of how your business is performing. Once you've learned the basics, the next step is understanding your financial statements. These reports tell the story of your business and reveal whether it's becoming stronger over time. Start with the income statement, often called the profit and loss statement or P&L. It summarizes your revenue, expenses, and net profit over a specific period so you can clearly see whether your business is making money. Next is the balance sheet. This report provides a snapshot of your business at a particular moment in time. It shows your assets, your liabilities, and your owner's equity, which represents what's left after liabilities are subtracted from assets. Then there's the cash flow statement. Unlike the income statement, this report tracks the actual movement of cash into and out of your business, giving you a realistic picture of how much money is available to keep operations running. As you become more comfortable reading these reports, you'll encounter several important financial terms. Gross income refers to earnings before operating expenses, while net income represents what's left after every expense has been paid. You'll also want to understand cost of goods sold, commonly known as COGS. These are the direct costs required to produce your products or deliver your services, making COGS one of the most important measurements of profitability. Operating profit is another key metric. It measures how much profit your business generates from its normal operations before interest and taxes are taken into account. You'll also come across depreciation and amortization. These accounting methods spread the cost of long-term assets over time, reducing reported profits while reflecting the gradual decline in an asset's value. Another important concept is retained earnings. Instead of distributing every dollar of profit to owners, many successful businesses reinvest a portion of those earnings back into the company to support future growth. Financial ratios also provide valuable insight into your company's performance. Return on investment, or ROI, measures how effectively investments generate profits. Return on equity, or ROE, shows how efficiently shareholder investments are producing returns. The current ratio helps determine whether your business has enough short-term assets to meet upcoming obligations. Don't overlook financial forecasting either. Forecasting helps you estimate future sales, expenses, and cash needs so you can prepare for slower periods. identify growth opportunities, and make smarter business decisions before challenges arise. Once you're comfortable reading your financial statements, it's time to actively manage your money. Start by building a business budget that estimates your expected income and assigns every anticipated expense before the money is spent. Always separate fixed expenses such as rent, insurance, and software subscriptions from variable expenses like inventory, shipping, or raw materials. Understanding the difference gives you greater control over your costs as your business expands. Every dollar matters, so track every expense carefully. Whether you use Microsoft Excel, Google Sheets, QuickBooks, or another accounting platform, consistent record-keeping helps you identify spending patterns before they become expensive problems. One mistake many first-time entrepreneurs make is mixing personal and business expenses. Avoid this by opening separate business bank accounts and keeping every transaction organized from the very beginning. Know your break-even point, the point where your revenue fully covers your expenses. Once you know this number, you'll understand exactly how much business you need before generating meaningful profit. It's also smart to build an emergency cash reserve. Unexpected expenses, slower sales, equipment repairs, or delayed customer payments can all interrupt cash flow if you're not prepared. Review your budget every month and regularly analyze your financial performance. If profitability isn't where you'd like it to be, look for unnecessary expenses you can eliminate without slowing future growth. Set clear financial targets every month, every quarter, and every year. Then measure your progress consistently. A simple rule many successful business owners follow is this: if an expense doesn't help your business make money or save money, it deserves a second look. Strong cost management is one of the fastest ways to improve profit margins while helping your business stay resilient through changing economic conditions. Now let's talk about funding your business. Every company needs capital to launch, operate, or expand, and there are several ways to secure it. You might use your own savings, apply for a small business loan, raise venture capital, or work with angel investors. Before approaching any lender or investor, prepare a detailed financial plan and realistic cash flow projections. Demonstrating that you understand your numbers builds confidence and improves your chances of securing funding. Before spending money on advertising, hiring employees, equipment, or expansion, calculate your expected return on investment. Every major financial decision should have a clear path toward creating value. It's also important to understand compound interest. When used wisely, it can significantly grow your investments over time. But when managing debt, compound interest can also make borrowing much more expensive if balances aren't paid down responsibly. Learn the fundamentals of equity financing, bootstrapping, and crowdfunding so you can choose the funding strategy that best fits your business goals. Understand the difference between long-term business loans and working capital loans, and take the time to build a strong business credit profile. Good business credit can open the door to better financing options and lower borrowing costs. At the same time, avoid relying too heavily on debt. Used responsibly, debt can accelerate growth. Used carelessly, it can limit opportunities and create unnecessary financial pressure. If you bring investors into your business, document every agreement carefully and understand how ownership, voting rights, and future fundraising decisions may be affected. As your company grows, monitor important metrics like burn rate, which measures how much cash your business spends each month, and runway, which estimates how long your available cash can support operations at your current spending level. Whether you're preparing for your first round of funding or building a company that serves customers around the world, understanding these financial concepts will help you negotiate with confidence, maintain control of your business, make smarter financial decisions, and create sustainable long-term growth. Learning business finance is a journey, not something you master in a single weekend. The good news is that every skill builds on the last, and with consistent practice, you'll become more confident with your numbers over time. A great place to begin is by using cloud-based accounting software. Platforms like QuickBooks and Xero automate much of the bookkeeping process, organize your financial records, and make it much easier to monitor your business without spending hours buried in spreadsheets. You can also speed up your learning through online education. There are excellent beginner-friendly courses on YouTube, Udemy, Coursera, and other learning platforms that explain business finance in practical, easy-to-understand ways. Now let's look at 10 financial tools that can make managing your business significantly easier, regardless of your industry or company size. First is QuickBooks, one of the most popular accounting solutions for small businesses. It helps manage invoices, expenses, payroll, tax preparation, and financial reporting while giving you real-time visibility into your company's finances. Second is Float, a cash flow forecasting platform that integrates with your accounting software to help predict future cash balances so you can identify potential cash shortages before they become serious issues. Third is Stripe, one of the world's leading payment processing platforms. It allows businesses to accept online payments, manage recurring subscriptions, and process international transactions with ease. Fourth is Expensify, an expense management platform that simplifies receipt tracking, mileage reporting, and employee reimbursements. It's especially valuable for businesses with traveling employees or remote teams. Fifth is Planful, a financial planning and analysis platform that helps finance teams collaborate on budgets, forecasting, and long-term strategic planning. Sixth is Brex, a financial platform designed for modern startups. It offers corporate credit cards, spending controls, and real-time visibility into company expenses, making financial management much more efficient. Seventh is Carta, a platform built to help startups manage equity ownership, capitalization tables, employee stock options, and investor relationships. If you're planning to raise outside funding, this is one of the most valuable tools you can have. Eighth is FreshBooks, which is especially popular among freelancers, consultants, and service-based businesses. It combines invoicing, time tracking, and client billing into one streamlined platform. Ninth is Zero Projects, a project management and cost tracking tool that helps businesses monitor budgets, billable hours, project costs, and profitability for every client engagement. Finally, number 10 is Gusto. It simplifies payroll, tax filings, employee benefits, and HR compliance, making it an excellent choice for growing businesses with employees across multiple states or remote teams. Together, these tools create a powerful financial technology stack that saves time, improves decision-making, and gives your business a stronger foundation for long-term growth. Beyond software, invest time in learning Microsoft Excel or Google Sheets. Even basic spreadsheet skills can dramatically improve your ability to analyze financial data, build budgets, and make informed business decisions. Just as important, develop strong financial discipline. Review your financial numbers every week instead of waiting until tax season. Regular reviews help you identify trends early and solve small issues before they become expensive problems. Make it a priority to understand your tax obligations. The tax system isn't something to fear, it's something to understand. Staying compliant protects your business and helps you avoid unnecessary penalties. Whenever you're uncertain about an important financial decision, don't hesitate to consult a CPA, accountant, or financial advisor. The right guidance often saves far more money than it costs. Always remember that businesses rarely succeed because of a great idea alone. In many cases, long-term success comes from consistently making smart financial decisions. Keep developing your financial knowledge throughout your entrepreneurial journey. Read books, follow trusted business finance educators, listen to podcasts, and continue learning from reliable sources. Every new concept you master becomes another tool that helps you make better decisions. Most importantly, believe that you can learn this. You don't need a finance degree to take control of your business finances. What matters is your willingness to keep learning, consistently monitor your numbers, and make thoughtful decisions based on what those numbers are telling you. Because once you truly understand business finance, you're doing much more than managing a business. You're building a business that has the potential to create lasting wealth. If you found this video valuable, be sure to like the video, subscribe to the channel, and share it with another entrepreneur who could benefit from it. Thanks so much for watching, and I'll see you in the next video. Until then, keep learning, keep improving, and keep building a stronger business every single day.